Hello students, hope you will like and understand the content of this video. If you have got any query, please send it through the comment box. If you like Smartlectures, please subscribe, follow, like, comment and share our channel. Thank you very much.
ABC were three partners in the ratio of 2:2:1 and this was the balance sheet as at 31st December. Capitals: A 30,000, B 20,000, C 10,000. General reserve 10,000. Creditors 20,000. Total 90,000. On asset side, building 80,000. Cash 10,000. Total 90,000. And the firm is dissolved on the same date. Building was sold rupees 100,000 and creditors were settled at rupees 10,000. This balance sheet has not been made as per the liquidity order. We have created this type of balance sheet in this question and in the upcoming questions for the convenience of explanation. So you should prepare the balance sheet as per the instructions of your teacher. Let me remind you, in this question clearly stated that building is sold for rupees 100,000. However, the book value was only 80,000. If the question is silent regarding sale of any asset, we can safely assume that it didn't have any market value. But if the question is silent regarding any liability, we can assume that liability has been paid in full. For example, in this question, it's clearly stated that creditors were settled at rupees 10,000. If this statement had been missing, it means the question had not mentioned anything about the payment of creditors. We would assume that creditors were paid at rupees 20,000. Anyhow, let's start the question. Let's take up the liabilities one by one. Capitals A, B, C. The capitals are fluctuating here because there is no current account. If there is no partner's current account, it means the capital accounts are fluctuating and we cannot touch capital accounts. And then general reserve. It is accumulated profit carrying credit balance because it is on liability side. This account must be closed. And how it will be closed? It will be debited. You know, all liabilities will be debited to close them. So general reserve account debit to A's capital, to B's capital, to C's capital. 10,000, 4,000, 4,000, 2,000. Then creditors. Creditors account debit to realization account. I have already told you accumulated profits are transferred to the capital accounts and other liabilities are transferred to realization account. So in this way, general reserve account is closed, creditors account is closed. We have got only one account active, that is capital. So capital accounts are still alive and we have created realization account. Now come on the asset side, close all the assets. Building 80,000, it means building is debited as per books 80,000 and you have to close the account. So what will you do? The asset will be credited. So all the assets will be credited in this question. So to building account 80,000 and debit realization account. And cash account, please don't touch it. So in this way, all assets and liabilities accounts are closed except capital and cash account. And we have created one more account, that is realization account. So be careful. Now in the further entries, we can debit or credit only three accounts: cash, capital or realization account. Now read the further instructions in the question one by one. Building was sold 100,000. So what will be the journal entry? Cash account debit to building. No, we cannot credit building account because building account has been closed. So we will write down cash account debit to realization account, rupees 100,000. Then creditors were paid at rupees 10,000. Normal journal entry is creditors account debit to cash account. But in this situation, creditors account has been closed. So journal entry will be realization account debit to cash account, rupees 10,000. Now leave the space for one journal entry for realization loss or profit, because at this moment we cannot calculate loss or profit. That can be ascertained only when we prepare realization account in the ledger posting. And then leave the space for A's final settlement, B's final settlement and C's final settlement. Now this is the turn of ledgers. We have to prepare 3 ledgers: realization account, then capital accounts, then cash account. So first turn is realization account. So I am going to do the ledger posting on the basis of journal entries. By creditors rupees 20,000 to building 80,000, by cash 100,000 to cash 10,000. In this way the total on credit side is 120,000 and the balancing figure on the debit side is 30,000. You can see that the credit side is heavier. If the realization account carries heavy credit side, it means there is a profit on realization account. So this profit of rupees 30,000 will be transferred to capital accounts, to A's capital, to B's capital, to C's capital in the ratio of 2 to 1. That will be 12,000, 12,000, 6,000 and 30,000 in the outer column. So you can see that the realization account has been closed. So we have got one new journal entry, that is realization to ABC. So come on the journal entries, and we had already left the space for one journal entry for profit and loss on realization account. So the journal entry will be realization account debit 30,000 to A's capital, to B's capital, to C's capital, 12,000, 12,000 and 6,000. Now come to the capital accounts. I am going to prepare columnar capital accounts. Might be your teacher or some publisher is preparing individual capital accounts. So that doesn't matter, because for the convenience of explanation, we are preparing columnar capital accounts for A, B, C. So we can do the ledger posting on the basis of journal entries. So by balance BD from the balance sheet 30, 20, 10,000. Then by general reserve from the journal entry 4,000, 4,000, 2,000. Then by realization account 12,000, 12,000, 6,000 and the total will be 46,000, 36,000 and 18,000. And now close the capital accounts. So to cash account, in the bracket you can write down final settlement 46,000, 36,000 and 18,000. We have already left the space in the journal entries for final settlement. So journal entries will be A's capital account debit to cash account 46,000, and in the narration you can write down final settlement to A. Then B's capital account debit to cash account 36,000. This is the final settlement to B. Then C's capital account debit to cash account 18,000. Final settlement to C. Be careful, in the upcoming questions I won't be writing down any narration. So in this way all the journal entries are complete, capital accounts are closed. Now this is the turn of cash account. So to balance BD 10,000, I have taken this figure from the last balance sheet. Then I am going to do the ledger posting on the basis of journal entries. To realization account rupees 100,000, and you can write down building in the inner column. Then by realization account, that is for creditors rupees 10,000. Then by A's capital final settlement 46,000. Then by B's capital final settlement 36,000. Then by C's capital final settlement 18,000, and total on both sides 110,000. There is no closing balance or balance CD in cash account. It means the cash account is closed. In this way all of the accounts have been closed and the firm is totally finished in the accounting. One thing more I would like to explain you here, that we generally use in India lakh. The spellings are LAC or sometimes LACS for plural, and some people like to write down LAKH, lakh, or LAKH, lakhs. These terms of lakhs is used only in India, Pakistan or Nepal or Bangladesh. If you leave these countries, you won't find this word anywhere, because suppose there is one with 5 zeros after 1. In India it can be called 1 lakh, but in Western world it is called 100,000. And one thing more, I would like to remind you about the basic principle of ledger posting. If anything is debited in the journal entry, it means the same thing will be debited in the ledger posting. When I say that it will be debited in the ledger posting, it means it will be posted on the debit side of that account, or the same amount will be written on the debit side of that account. For example, the question is cash account debit to realization 100,000. In this journal entry, cash account is being debited by rupees 100,000. It means it will be posted on the debit side of cash account 100,000. And realization account has been credited by rupees 100,000 in journal entry. It means realization account will be credited in the ledger posting. It means when we prepare realization account, on the credit side we will write down by whatever we write down, but 100,000 will be in the amount column. It means realization account has been credited, means posted on the credit side.